its offices in Delhi, Gurgaon, Mumbai, Bangalore, and the Gift City. India Juris provides legal services in private equity and venture capital transactions, startup investment transactions, civil litigation, corporate and commercial litigation, fund setup, and many more. In today's webinar, we have participants from a diverse range of sectors like funds, professionals, consultants, advisors, even students and academicians. To enlighten our participants, we have our eminent speakers. I would first like to introduce the speaker, Mr. Vaibhav Gupta. He is a partner at Dhruva Advisors LLP. He is also a member of the Institute of Chartered Accountants of India based in Dhruva's Delhi office. He has more than 17 years of experience in M&A and advisory services. He specializes in mergers and acquisitions, transaction structuring, corporate restructuring, joint venture, succession, ownership and planning, and many more such areas. He is an active columnist in India's leading financial dailies and journals. I welcome Mr. Vaibhav Gupta. Our second eminent speaker for today's webinar is Mr. Parth Shah. He is a senior compliance manager and principal officer in AML in ASK Investment Managers and member of the Institute of Company Secretaries of India, having more than 10 years of experience in secretarial, legal, and banking, financial, and insurance industry. Mr. Parth manages the regulatory compliance of the IFSC branch. I welcome Mr. Parth Shah. Our third eminent speaker is Advocate Sameer Rastogi. He is a managing partner of India Juris with more than 20 years of experience in representing clients in various sectors like corporate law, M&A, private equity, venture capital, capital markets, and many more. I welcome Mr. Sameer Rastogi. I now welcome Mr. Sameer Rastogi to welcome our eminent speakers and proceed with the webinar discussion.
Thank you. Thank you, Ananya. So I welcome all the participants and our eminent speakers, Mr. Vaibhav Gupta and Parth Shah. I just tell you that we had Mr. Parth in one of the webinar, and people and all the participants and audience have liked his deliberation so much that I received lot of admirations after the webinar as well. So thank you, Mr. Weber, for being again with us on this. I think we are doing something on our professional part in disseminating the information about Gift City so that something better can be done for our country and for our system. Thank you very much for being with us. So Parth, I met you in Gift City, and I'm sure you had a vast experience, and people, audience would definitely like to know about the practical experiences, how FMEs are there, what compliances you are doing, and how things are taking place. And it would be really great to hear from you during the course of this webinar. And I think there will be a lot of Q&As which I already have, and people would be throwing out during this series. So welcome you, and we'll catch up during the webinar with a lot of questions and your deliberation as well. Thank you.
Thank you very much, Suresh.
Thank you. So participants, first of all, the format of the webinar is that first of all, I'll take you through the setting up of fund and registration of the fund in Gift City. And then we have Mr. Vaibhav Gupta on structuring part and the taxation part. And we have then Pasha on the fund management entities and the compliance part. So from academic point of view, I'll run very fast. All our PowerPoints and everything are already available. It'll be there. I'll take you more on the practical aspect, well, the registering of the funds, what are the things coming up. So let me share my screen and we'll be upright on the registration of the funds. So friends, we are talking about setting up fund in Gift City IFSC. So you know, when we are setting up fund in Gift City, rest of India's funds in India are regulated by SEBI, and at Gift City the regulator is IFSCA, which is International Financial Service Center Authority. So to start with, all those who are aware of the fund structures, the funds in India, so this is just a small snapshot on the structure of the fund in IFSC, and detail you will hear from various structures and what are there from Mr. Vaibhav Gupta presentation. Normally in a fund, you would have a fund which you call fund in IFSC regulation. It is referred as a scheme. So there is a fund manager which is on the left, which is called fund management entity in IFSC. There is a trustee who represents or take care of the investors, and the investors can invest in this fund from foreign and from India, but from Indian investors has to be from FEMA perspective. And where this fund can invest, it can invest within IFSC and outside India and various other places. This is a typical general structure which is set up in Gift City. So what are the fund documentation? It's similar to as you have in when we register a fund with SEBI, AIF. Similarly, there is a PPM, we draw a private placement memorandum, there is a trust deed that when it is, if it is registered in the form of a trust, there is an LLP deed or company when it is registered in different forms of the entities. You have a contribution agreement which is signed between the fund and the investors who are contributing or investing in the fund, and you have investment management agreement which is generally between the fund and the FME. The investment manager is referred as FME in the context of IFSC. So this is the investment management agreement is between the fund and the FME. So whatever expenses or fees they are charging to the funds, it talks about that. So coming up fast on the fund ecosystem in the Gift City. So normally in Gift City, the regulator is regulating the fund managers, wherein in SEBI in India, in mainland, the regulation is on the fund and not on the investment manager. So this is the basic one of the difference between the SEBI and IFSC regime. So when you talk about registering a fund in IFSCA, in Gift City, the IFSCA Fund Management Entity Regulation 2022 is the main document which will tell you everything about registration of the funds, which is available on the website. You can have all those information from there. So these regulation mainly talks about two things. One is what kind of investment manager entity you can create in Gift City, and they would launch various funds. So one is fund. When we talk about what kind of funds it provides, there are three type of categories like venture capital. When I say schemes, it is equivalent to fund, or restricted schemes, non-retail, and there's retail schemes. So these are three type of broad categories of fund which can be found in IFSCA. Like you have category 1, 2, 3 in with SEBI. Similarly, the three kind of investment managers you can register fund management entities, which is authorized FME, which is the basic one, registered FME non-retail, and registered FME retail. So other things the regulation talks about is PMS services or the investment trust or family investment funds. So FIF is it's now gearing up. So we'll talk about it later on different other webinars. So normally categories of the three category of FME, one is authorized, which is the basic one. Third is registered, and FME non-retail and registered one. So main thing over here to note is that in the first authorized FME, the minimum net worth is required is $75,000. And in case of second category of fund manager, you need to have net worth of $500,000, and in third category, 1 million. So all technical details are written here, but I will tell you the practical aspect of it. Whenever we see somebody wants to set up a fund either in Gift City, so there are two kind of people, two kind of set of people who want to register fund in Gift City. One set is established funds or group houses who want to set up fund. For them, it's another fund. They don't have much issues. They are very much sorted out. But the larger part, the mandates and the queries we receive for setting up funds in Gift City are from the new time, new entrepreneurs, in new investment managers, new professionals who have good round of network throughout the globe and they want to set up fund in Gift City. So I'm going to tell my experience where this falls apart. I'm talking about for the people who are new and who are willing or who are looking at. I think in audience there may be so many people who may be thinking to set up fund in Gift City. The first thing for them is to see the minimum net worth. What I have seen, the new age people who want to set up in IFSC, their program get delayed or falls apart because of minimum net worth. When you say minimum net worth $75,000, initially you need to have your in FME. So either you can have an FME registered and put $75,000. If you can manage that, then you talk further and you look forward. The other thing is you can establish your branch office of an Indian entity or an outside entity in IFSCA for as a branch office, so that the authorized capital or the minimum net worth of the your parent company can be counted, but it has to be a regulated entity in the host jurisdiction. So we'll talk it about. So this is one of the thing. So people fall apart in getting this net worth, this initial things together. So if you are able to manage this thing, then you can look forward. So that was three kind of FMEs. Now three kind of funds category are there. One is venture capital scheme, which is launched by authorized FME can launch that, and you need minimum. You shall not have less than 50 investors, and green channel is allowed for them. Restricted investors, it can have 1,000 investors maximum, and for retail there is no limit on that. So these are the three, like category one, two, three, three kind of funds you can launch. So we are talking about the three kind of investment managers: authorized FME, registered FME, and non-retail. This is a chart which is giving you a comparative statement. Suppose if somebody wants to do, let us say, do a bigger fund or different fund, so you can always upgrade the status of your FME. Today, if you have less amount, if you are able to satisfy only $75,000 net worth, and you want to go to registered FME, so let us, you can start with authorized FME, and later on you can upgrade to registered FME. That is also possible. So authorized FME. So the first kind of investment manager can launch venture capital schemes on a prior. The second is VCS and restricted schemes, and third you can see all schemes offered to investors, including retail investors. So what is the form? So these investment managers can be found by way of company, LLP, or a branch. So this I was talking about. If you want to set up a branch, it's easy. You can simply have a registration of your branch in IFSC as a FME, and your net worth of the parent company can be counted over there, but that has to be regulated. Suppose if your Indian company is not regulated in India or anywhere, then you would not be able to establish a branch office there. So that is one thing you have to see. So minimum net worth, which I just talked about, 75,000, half a million, and 1 million in three kind of investment managers. And what kind of investors, from what kind of investors they can raise the fund, that is there. So accredited investors, if they want to raise the fund from accredited investors, so there is no limit. Other investors, the 2.5 lakh dollars minimum they have to invest. Employee and directors of the designated partners of the FME, so minimum 60,000. So similarly, in other investment managers, there is a limit. Like for second category, you have to have minimum, other than accredited investors, minimum 1.5 lakh dollars investment has to be there by a single investor. And then there is a discount on the FME for the employees who can, the threshold is lower for the employees. So minimum employees, so when you are setting up fund in Gift City, you need to have physical office there. You can go, and there are places available. You can take the places and get yourself as per your requirement. So minimum employee you have, for in case of all three category of investment manager, you can see it is one person is minimum. In case of second, you need one principal officer and one KMP. In case of third, you need three people minimum. So all these things you have to take care, think of when you are trying to set that these kind of people you have to put in Gift City. Similarly, launch of a scheme. So when these investment managers are launched, are set up, they will launch various funds. So in case of authorized FME, if you are launching a venture capital scheme, you can immediately launch. So they are under green channel. And in second category, PPM to be filed within 21 working days before the scheme launch. So all these things are there. You have to file, basically, in a nutshell, you have to file the PPM with the regulator, which is IFSCA, and then you can further start, you can launch the scheme. And in case of experience, what kind of people you need in Gift City in your investment management entity. So like in authorized FME, there is nothing prescribed. It says it's relevant. And in case of third category, the experience is provided, like 5 years if the in the managing under asset management is greater than 200 million with investors of 25,000. So these kind of experience, these kind of people you would require in case of third type of management entity if you are establishing in Gift City. So now we are talking about skin in the game, means every FME has to make a contribution. Like in SEBI also, we in AIF also we have some contribution by the investment manager or the sponsor. Here also there is a contribution required from the investment manager. So here the contribution is based on the target corpus. If the target corpus is less than 30 million, then you have to authorized FME has to put 2.5% of the target corpus, and maximum it can go up to 10% of the target corpus. Similarly, for registered FME, non-retail and registered, you can see the close-ended, open-ended, the target, the kind of corpus is required. So when somebody is trying to put up the funds, they have to also structure or to manage whether they would be able to put these contributions and how they would manage these contribution as the fund goes on, as you are raising the fund. So if you are more than 30 million, then 7.5 lakh dollar authorized FME has to put in the money, and all the limits are mentioned over there. But here angel fund, because in Gift City we have two, I know to my knowledge I have two angel funds very active in the Gift City. One is for We Founder Salgi group and other is from Venture Catalyst group, and both angel funds are serviced by us. They are very active and investing a lot. So for in case of an angel fund, the FME contribution has to be 2.5 and 20,000. You can see that for an angel fund, the FME contribution threshold is less. It is only $20,000. So whichever is less. And you have to fulfill these contribution requirements within 45 days. Okay. The contribution requirement by FME may be waived by investors as per regulation. So if you can take the consent from the investors, you can have as per the regulation, you can get the waiver of this contribution also. But for a professional investment manager, the waiver practically and strategically is not advisable, because the investors would give more trust to the investment managers who are investing their money as well. But there is an option in this. So these were the three types of the investment managers. What are they and how you can think of values setting up your fund there. And now we are talking about the three kind of category of funds which are available and these investment managers can launch. So one is venture capital scheme, another is restricted scheme, non-retail and retail scheme. You can similarly say a category 1, 2, 3 like that if you want to for your easy reference. So legal structure of the, you can see over there that company, LLP or a trust in all the cases, but in third case, LLP is not permitted. You can either have a company or a trust. Mostly, I would say majority of the funds registered are as a trust because it's a good entity as a pass-through entity, and it is most favored structure globally. So type of a scheme, when I say scheme, you can simply understand the fund type of fund. So in VCS venture capital scheme, it's a close-ended fund. In second category, it can be close-ended, open-ended, and similarly in third, you can see. So the corpus, so what could be the corpus of the funds launched by these entities? So the corpus is lowest is 5 million. And in case of angel fund, if you want to an angel fund, so the lowest corpus is 1 million. So angel fund, basically, if there is somebody in the audience who have a lot of network globally and they want to pool in money from the various connects and then invest in India or globally, so angel fund may be one of the best things. And here the threshold contribution is very less, the minimum corpus is less, and deal by deal you can get the investors on board and invest in different companies. So all those things you can look at. The maximum investment is 200 million for a VCS, and second and third category you can see there is no limit. So maximum number of investors, it has to be 15 in particular scheme or a fund in VCS, or less than 200 per portfolio in an angel fund. So angel fund, you will have every company or early stage undertaking investment. So in one of that, it should be less than 200. In second category, maximum investors, you can have 1,000. So when you are structuring for us, looking at, you have to see, suppose if you are going to take money from, let's say, 300 people. So first category would not suffice to you. So it's all, so based on everything, you have to decide what kind of fund management entity you should go on, and what kind of fund you should go on. So similarly, there is a minimum number of investors. In third category, it is 20. So minimum contribution from an investor in scheme. We just discussed earlier that in first category, you need $2.5 lakh. In third category, you need $1.5 lakh. And there are lower thresholds for the employees and directors of the FMEs. So the tenure minimum is For first category, minimum tenure is 3 years. It can be extended, and in second category, it's close-ended, minimum 1 year, and similarly in retail scheme, close-ended, minimum 3 years. So these are the various tenures. So again, when you are deciding, you can see what kind of fund, what kind of tenure you want to give, what kind of, these are the minimum. Maximum you can have whatever suits to your strategy. So investment in unlisted entities. So in first category, you don't have any restriction, but on second or third, there are restriction on close and on the basis of close-ended and open-ended. The limits are written there, which are easy to understand. Maximum 25% of the corpus in case of retail scheme, non-retail, you can invest in one entity. So investment in associates of FME. So permissible subject to 75 of the investors approval by the approved by value. So many of the times the investment managers would have some affiliation or something, and if you want to invest in that, so you need to take care of this. So valuation frequency means whatever portfolio you have invested, you need to value your portfolio every year, and there are reportings to the regulator as well. So valuation in case of if you are a first venture capital fund, if you are launched venture capital scheme, so you need a valuation where yearly restricted scheme if it is, so you need close-ended funds, you need half-yearly, and open-ended you need monthly, and retail you need open-ended daily and close-ended weekly. So all these whether you say talk about custodian, whether you talk about fund accounting or administration, all ecosystem is available within the gift city. Very great professionals all are available, and you can interact with them, and you can get engaged with them if you are trying to explore these. So leverage in case of, whenever there is a fund, so leverage is one of the best way to maximize the profits of the funds or yield of the fund. So in case of, you can see it is permissible, and in third category, there are certain limitations. So custodian, like in AIF, you require a about custodian after a certain limit. So in here in Gift City, if the asset under management is greater than 70 million, then custodian is a compulsory. If it is less than, then it's your option that you want to, but the cost is not much high. It is always advisable. You can have a custodian, which gives comfort to the investors. So similarly, if you can see in other category also, beyond a particular limit, custodian is compulsory. But in case of retail scheme, it is compulsory in any way. So, and now what kind of investments are permissible by these schemes? When I say scheme, means all funds. So you can say they can invest mostly everything, whatever you can think of, and like securities issued by unlisted entities, security listed to be listed stock exchange in IFSCA. So most of the options are available at wide range of things on products or securities they can invest in within Gift City, outside India. So restricted and retail scheme may invest in derivatives, including commodity derivatives. Closed-ended restricted scheme may invest up to 20% corpus in physical assets, as may be specified. Physical asset means you have to acquire certain physical asset, maybe a real estate or something, so you can do that, which is a unique feature. So retail scheme not permitted to invest in units of mutual fund and AIF and AIFs in IFSC. So this is the at the moment the structure which is prevailing in the IFSC FME regulations. And so now we are end on the setting up fund. So what is the broad process, how you go about it? In Gift City, there are two regulators. One is SEZ and one is IFSCA. So for setting up fund, you require approval from and registration with both the authorities. So once you register with both the authorities, you get the approval and you are up and running. So it is just a process that you go and see the space, you get the space from there, and based on then space you apply to SEZ and IFSCA, apply your GST number and all those things, and then you are up. And the process is quite simple. And yes, with this, I think this was the brief on the setting of fund in Gift City. So I think we will take up all the questions after we have our esteemed panelists have given their lectures, their talk, and now with this, now I invite Mr. Vaibhav Gupta for his deliberation on structuring and taxation, and we are eagerly willing to listen this time also what new you have and what new things have, what your practice have been, or new things you have done so far. I think it will be really interesting to hear you. Thank you. Welcome.
Thank you, Samir, and thank. This was a very insightful discussion that you shared on the various aspects, the legal aspects of setting up funds in the gift city. So while I share my screen, just a very quick intro. My name is Vaibhav Gupta. I am a partner at Dhruva Advisors in the Delhi office. Dhruva, as I'm sure many of the audience members must be aware, we are a tax consulting firm. Advise various clients on all aspects of taxes, and as part of that, we've been working with several clients on setting up structures in the gift city. FM more on the FME side, whether it is the authorized FME, which is the Family Investment Fund, or it is AIF. We've been working with several clients, and as we know, the entire FME regulation in the gift city is an evolving regulation. While the law has been in place for the last almost an year or so, but things have been evolving and things have been dynamically evolving in that sense. The regulator has been very proactively looking at addressing issues that clients and people are facing. And we expect the regulation to continue to evolve until it really settles down. There are times when the Reserve Bank of India also takes up views and positions, which then need to be considered adequately. So without taking more of your time, what we'll do, and I've just have a few slides, what we'll do is we'll talk about the various income tax aspects of setting up funds in Gift City. How do tax laws apply? What are the tax provisions for the various constituents of the entire FME ecosystem in the Gift City? So just to recapitulate, this is what Samir already discussed. This is overall, conceptually a structure of a fund in the Gift City, where you'll have a fund and you'll have a fund management entity to manage the fund, and a sponsor who will have the sponsor commitment. In many cases, these can be the same, and you will have investors in the fund who will be pooling in money. And these investors again can be domestic investors, they can be non-resident investors. And the fund is also then again it will be investing the money that it pools into various asset classes. They can be onshore as well as offshore. So what are the various entities that need to be looked at from a taxation perspective? One is the fund itself, the alternative investment fund, which is the non-retail or the retail scheme that the fund management entity launches. Second is the fund management entity, which is basically managing the fund and launching these schemes. And third, maybe we'll briefly touch upon family investment fund. We've had separate discussions on this along with Samir in separate webinars, but just for the sake of completeness, we'll also spend some time on taxation of a family investment fund. So when it comes to AIF, so there are three categories of AIFs that can be set up in the Gift City, just like we've got three categories of domestic AIFs. So category 1 AIF, cat 2 and cat 3 AIF. So the taxation. So first of all, before we go anywhere, I think one point that I would like to mention is that while any entity set up in the Gift City is considered as a overseas entity or a non-resident entity from a FEMA perspective, because the jurisdiction itself is considered outside India while being physically in India. From an income tax perspective, any entity set up in the Gift City is considered as an Indian tax resident. So it's not considered as a non-resident under income tax. So coming back to AIF, a Cat 1 and a Cat 2 AIF is accorded a tax pass-through status for all the incomes other than business income, and typically all the incomes that an AIF will earn of the nature that we are contemplating here will be in the nature of either capital gains or interest or dividends. So on all such incomes, a Cat 1 or a Cat 2 AIF gets a tax pass-through status, which basically means that the income is not taxed in the hands of the AIF when it is received, but it is taxed as if it was received directly in the hands of the investors of the AIF. And the tax rates that apply will be the tax rates that will apply to each of those investors. Whether they are residents or non-residents depends. So the tax rates will depend accordingly. And if there are non-resident investors, and if they come from a country which has a tax treaty with India, then the tax rate will also consider the tax rates prescribed under the treaty. And as we all know, the way income tax works for non-residents is the tax rate that is applied is the tax rate prescribed under the domestic Indian tax law or the tax rate prescribed under the treaty, whichever is beneficial for the taxpayer. So that's the broad tax position for a Cat 1 and a Cat 2 AIF. When it comes to a Cat 3 AIF, a Cat 3 AIF does not enjoy a tax pass-through status, which means that the income is taxed in the hands of the AIF when the income is received by the AIF at the applicable rates. Now, the rates that will apply will again depend on the nature of the entity of the AIF. So as Samir mentioned, an AIF scheme could be set up as a company or an LLP or a trust, other than where it is a retail scheme where an LLP is not permitted. So depending on how the AIF is set up, the tax rates will differ. Just as a very brief this thing, if the AIF is set up as a company, then the tax rate that applies on the AIF on the company, if it opts for the beneficial tax regime of 22%, will be an effective tax rate of 25.17%. Whereas if it was an LLP, then the tax rate that applies is 30% plus a surcharge, which is effectively around 35%. And once the income is taxed in the hands of the AIF, then the income is not taxed in the hands of the investors. So because there is no tax pass-through status, so there is no tax in the hands of the investors. There is a specific dispensation or or a beneficial provision which is provided where all the units of a Cat 3 AIF are held by non-residents, of course, other than those units held by the sponsor or the fund manager. So where all such units are held by non-residents, then if the AIF transfers any securities other than shares of an Indian company, then those incomes, those capital gains are exempt from taxes in India. This is a benefit that has been provided specifically to a Cat 3 AIF set up in the gift city. Then there are beneficial tax rates provided for any dividend or interest income where a tax rate of 10% has been prescribed. Again, another benefit that is provided is that if there are non-resident investors, then if they transfer any of the units of the AIF or they receive any income as distribution from the AIF, then non-residents are eligible for an exemption on any of that income. They don't need to pay taxes in India on that income. I'll just come back to this slide. Maybe we'll first go to the fund management entity, which is basically the fund manager. And the nature of income of the fund manager really primarily will be the fund management fees, and then it could have some carried interest on the sponsor contribution that it has made. A fund management entity, which is basically the registered unit in the IFSC, will be eligible for a tax holiday or 100% deduction against its income for any 10 consecutive years out of the first 15 years of its operation. So this is a tax holiday that is provided under the income tax law for any income of a fund management entity. So just to repeat myself, what we are saying is that any income earned by a fund management entity is eligible for a 100% tax holiday for any block of a consecutive 10 years out of the first 15 years, which means that for in those 10 years block, the fund management entity is not liable to pay any income taxes in India. Having said that, uh, the other aspect that we need to be also mindful about is MAT, or minimum alternate tax, which if if people will recall, is a tax on book profits, where even if your tax on your normal taxable income is less, but if the tax on your book profits is higher, then one needs to pay a minimum alternate tax, which gets credited, and it is creditable over a period of 15 years. Now here, when it comes to an FME, if an FME has been set up as a company, and if the company opts for the 22% tax rate, which is an option available to all companies in India, then the FME does not need to pay any minimum alternate tax also. However, if an FME is set up as a limited liability partnership, an LLP, then while it enjoys the 100% tax holiday for 10 years, but it will have to pay a minimum alternate tax at the rate of 9% on its book profits or adjusted total income. Now, while this is a tax payout which needs to be made by this LLP, the minimum alternate tax is available as a credit for the next 15 years, which means that whenever the LLP gets out of the tax holiday period, which is the 10-year period, and starts paying normal taxes, the MAT paid in those 10 years will be available to be offset against the normal taxes paid. So that's on the income tax position on an FME. Coming to GST, any management fees that the FME gets from the scheme is exempt from any GST payments. Then we come to the distributions from the FME, distributions of profits by the fund management entity. Now, the distribution of the profits and the taxability of such distribution will really depend on how the FME has been set up. And this becomes very important from a structuring perspective, because if the FME is set up as a company, and as we discussed, the company is eligible for a tax holiday for the 10 years period, but any distributions made by the company to its shareholders will be taxable, because that distribution happens as a dividend, and that dividend gets taxed in the hands of the shareholders as their normal income. Again, if there are non-resident shareholders, then treaty rates are available. However, if the FME has been set up as an LLP, then as we discussed, while the LLP has to pay a MAT of 9% in the tax holiday period, but any distribution of the post-tax profits by the LLP to its shareholders or partners, as we call them, is tax-free, which means that once the LLP has paid its due share of taxes on its profits, any distribution of the profits to the partners of the LLP are completely tax-free. So that's the tax position on a fund management entity. Now I'll come back to a family investment fund. Again, a family investment fund, this is different from an AIF. This is more the single family office structure that is there under the GIFT City regulation. Now, the difference really when it comes to a family investment fund is that, while as Samir discussed, in the context of an AIF scheme, which is, let's say a non-retail scheme or a VC fund scheme, the fund management entity is different from the scheme itself. When it comes to a family investment fund, the family investment fund does not require a separate fund management entity as the law stands today. And hence the family investment fund is itself the registered unit in the IFSC. And the way Indian tax law works is that the tax holiday has been provided to a unit registered in the gift city, which means that if a family investment fund is itself the unit registered in the gift city, it is then eligible for the 100% tax holiday on all of its income for the 10-year block out of the 15 years block, as we discussed. Now, this becomes a very interesting proposition because the income of the investment fund could be all kinds of income, including any capital gains or any interest or any dividend. In that sense, a family investment fund will enjoy a
तुम
full
लोग
tax
मिडल
on all kinds
यूज
of
करके
income
ऐसे छोड़
for
देते
10 years.
बेड में घुसा देते हैं
And
नीचे
again,
डाल देते
MAT
हैं
provisions will apply in similar manner.
अरे हुआ किसी
The
को इंजरी
family
हुआ तभी
investment
तो
fund
सबको
is an
बुलाए
LLP, then it will have to pay the
हैं
9%, which is credited by the government.
अगर
Mr.
तुम
Param, can
लोगों
you
को
please
भी लग जाए
mute
तो
yourself?
So that is
किसने छोड़ा मैंने
basically
तो नहीं छोड़ा
the tax provisions
इसमें ईमेल ही नहीं होगी
for the
किसी ने
various
तो छोड़ा होगा ना
fund
जिसने
management
ईमेल यूज
entities
किया
in the gift city. From a
ईमेल
purely
लिया काम दूंगा
planning and financial structure setup perspective, what really becomes important.
Mr. Param Hans Mishra, can you please mute yourself?
ये तो तुम लोगों के
Mr.
अपने लिए
Param,
नुकसान
can you
है
hear
ना
me?
अगर कोई भी ऐसा होगा किसी को भी लगे
Admin is
उसको
requested to please mute him.
Yes, yes. Just check.
Sorry about that. So what I was saying is that what becomes important is at the time of planning itself, it becomes important to take care of these tax aspects, in terms of what should be the right legal entity that we should set up. While there are tax benefits available to some kinds of entities, but one needs to look at MAT as well as the total effective tax rate, considering distributions to be made to the investors. So that is an important
स्क्रीन
thing.
आपका ऑफ शेयर हो गया, प्लीज शेयर द स्क्रीन.
Yeah,
स्क्रीन
Samir,
आपका
so that was pretty much the end of the presentation, Samir. Yeah,
Great.
so Samir, back to you. Thank you, everyone.
Thank you. So thank you, Vaibhav. It was really always pleasure. Every time I also learn a lot of things from your presentation, and it's good to know about it. I think a lot of questions are coming up. So now I would request Mr. Pasha to please uh, give us insight on the compliances on the fund management entity, and we would also like to know what about ASK, what have been the journey so far, and about your, because from a example point of view, people would like to know how you feel operating as a fund manager, how you feel as operating in IFSC. So over to Parth. Thank you.
Thank you very much, Samir. Good afternoon to all of you. So I will just put across a quick introduction of myself. First, I'm a compliance officer for ASK Investment Managers Limited, GIFT City Vertical. ASK Investment Managers is the first PMS license holder in GIFT City, and we have just migrated to FME non-retail license, and we are undertaking investment advisory services under the PMS mandate from here. We are advising to our offshore clients, and we are managing 400 odd millions advisory out of the GIFT IFSC. Yeah, I mean, Samir, rightly mentioned by you, the regulation has been evolved quite a bit over the years, and so the regulations are, when it comes to the sustainable regulatory regime, the fund management regulations are quite transparent and robust to cater the fund ecosystem in IFSC. And definitely, I must say that the regulators are quite tied up in terms of making this regulation much better, making this regime much better, and a lot of applications, lot of low inflow, I would say rather. The regulator is seeing, and we are seeing a lot of momentum in terms of getting a lot of applications. I mean, the as I mentioned, the regime is evolving quite a bit, and the regulator is also coming out with so much of clarity. If you would have been aware about that, the last year, last evening as well, the regulator has come up with the frequently asked question on the fund and the schemes, because there are a lot of clarities the people are seeking in terms of how better the applications can be made or how quick the things can be moved on. So yeah, definitely the things are quite good. And we have spent 2.5 years in GIFT IFSC. We are operational since 1st April 2021. It's the first financial year of 2021. And yeah, so this and thank you for giving me an opportunity. It is an honor to speak before you today to discuss the compliances for the fund management entities under the IFSC fund management regulations issued by IFSC authority in May 2022. Uh, for the next 10 minutes, I'll quickly demonstrate the key regulatory requirement for the fund management entities as per the regulations, and later happy to address the questions in case one may have. But while Samir has already covered the fundamental requirements, without reiterating, I will touch upon few points which are vital from the regulatory aspects. Just allow me a moment to share my screen. Thank you. Hope my screen is visible.
Yes.
Okay, so like I mentioned, I will not reiterate, I will not touch upon these all the points. I have made all the present. I mean, I tried to capture all the fundamental information because these are also a part of the compliance ecosystem that the entities are always required to maintain such parameters at all times. I will quickly touch upon few of the aspects which I have deliberated, and yeah. So, like mentioned by Samirji, the entities are required to obtain the desired license under the said regulation. Obviously, the entities can be set up in a form of LLP or company or trust or branch. However, one thing to note is the retail entities are not permitted to set up in a form of LLP, and FME operating as a branch in IFSC shall ring fence the operation between the branch and the parent entity. Now, this is one of the most important element one may need to note up, which means ring fence. However, the authority has not come up with any particular clarification around the ring fencing. But typically, ring fencing means there has to be a clear demarcation, between the legally, financially, operationally, technologically, or between the parent entity and branch. So I would just simplify the term that the activity, the core activity which you are undertaking out of the GIFT IFSC should not be shared with your parent entity. So and hence these PO and CO requirements are in place. So separate, according to the regulation 7 of the fund management entity regulations 2022, the principal officer, compliance officer, and the fund managers, these are the KMPs from the IFSC's point of view. They are required to be located in IFSC at all times. So the requirement is coming from here. So this is something which should be noted out. Apart from this, there is one more element which I would like to touch upon, that in addition of all the compliances, there will be a requirement of office space and adequate technological infrastructure. Also, entities will require to open the separate bank account in the IFSC banking unit. It is for the purpose of accepting the investments from the investor and accept the remittances from the various sources. Additionally, entities will require to open the special non-resident rupee account in domestic banking unit. This account is specifically, specifically utilized for the purpose of defraying the branch-related administrative expenses. So this account will be utilized to defray all the expenses that are pertaining into INR, right? Because this is the zone where you cannot spend the money in INR. This is a foreign currency zone, so you have to ensure that an account which is operational in IFSC banking unit, that is only made for the purpose of transferring that money from IFSC banking unit to your SNRR account, and then subsequently that SNRR account will be utilized to defray all branch-related administrative expenses. Obviously, new entities are permitted to settle preliminary expenses from their domestic current account to some extent. As per the FEMA regulation, I guess it is a FEMA foreign currency accounts person resident of India kind of regulation 2020, which was issued in 2015. Another element I just wanted to touch upon with regard to the compliance is Yeah. So this is with regard to the sponsor contribution. Like what mentioned by Samir ji, the sponsor contribution is applicable as per the regulations. However, it is exempted in case of the relocation of funds.
Yeah, he is very
Fund.
oldie guy. He stays in.
Hello. Yeah. The sponsor contribution is applicable as per the regulation, like what I mentioned. However, it is exempted in the case of the relocation of fund of fund. The funds wherein two-third investors are accredited investors, and the funds wherein two-third investor by virtue of their value agree to waive off such condition. Another point I wanted to touch upon is with regard to the PPM. So the offering memorandum, so FMEs, all the entities are required to file the placement memorandum with the authority before 21 working days of launch of the scheme. However, the green channel is allowed in case of the VC as well as the accredited investor, where the in the scheme where the accredited investors are the investors only. Now, what is the green channel? So green channel is typically where the general general partner, nothing but the entity or the fund does not need to wait for to seek the IFSC's approval and can immediately open the fund for the subscription from the potential investors. So this is something which clearly defines the ring fencing green channel. Apparently, the PPM must look transparent and unambiguous with clear objectives of the investments and operation of the fund. One may also look at the FAQs which IFSC has issued last evening, where they have specified that which content should the PPM mention or the articulated PPM. Now, I would like to touch upon one of the all key requirement pertaining to AML CFT, which is a most curious part. So this is the most intriguing area of the fund management entities. The entities are required to adhere to the guidelines issued by the authority pertaining to the anti-money laundering, countering the financing of terrorism, and know your customer guidelines. Obviously, there is a standard KYC requirement to onboard the investor, depending upon the jurisdiction of the investor. If for example, if the investor is from the high risk jurisdiction, then the enhanced due diligence is required to be carried out, where it is significant to identify the source of the wealth or the source of the fund of such investor before accepting the investment. If the investor is located in the jurisdiction other than the high risk, then the client due diligence shall be required to be carried out, where proof of identity and the proof of address is sufficient to onboard the investor. Obviously, FMEs are required to consider the country list as per the FATF, which is a Financial Action Task Force, to classify the jurisdiction. FATF undertakes a quarterly review of all its member countries, and therefore it is significant to stay updated at all times. Further to the above, the entities are required to identify the beneficial owner or the natural person while onboarding a corporate investor per se. The beneficial owner is to be identified as per the Prevention of Money Laundering Act and the rules made thereunder. The entities are also required to carry out the periodic business risk assessment as well to identify the frequency of the audit. Also, the entities are required to ensure daily screening of their clients through various screening platforms like WorldCheck or similar. So, which means, irrespective of the facts, how many number of clients your funds may have, you have to ensure that all the investors are to be screened on daily basis, and you have to ensure that none of the investor has gone in has been blacklisted by World Forum or not, or maybe Interpol. Further to this, certainly all the regulated entities are mandatory to register. Yeah, so this is something which is one of the most important element from the AML CFT perspective, that all the regulated entities are mandatory to register with the Financial Intelligence Unit with India to report a suspicious transaction at all times. The entities are also required to appoint the designated director and the principal officer from the PMLA perspective and register them with the FIU India. Now, this is a mandatory requirement from the IFSCA regime perspective. These officers are responsible for monitoring and reporting all transactions and sharing all the information as required under the PMLA rules. With regard to the general obligations and all, the entities are required to adhere the general obligation outlined under the applicable regulations. The entities are required to formulate anti-money laundering policies. There are certain policies that, depending upon your business, which you are carrying out from or which you are undertaking out of the GIFT IFSC, you have to formulate certain policies. Like I can name a few, like anti-money laundering policy, business continuity plan, conflict of interest, risk management, gift and entertainment policy, cyber resilience, cyber security and resilience framework. These are certain policies and framework you will need to ensure that to be carried out. Also, one of the most important policy from the fund perspective, it is a valuation policy, right? So these are the policies depending upon the business that you are undertaking out of the FSC. One more thing I would like to highlight over here is, although group policies, I mean, see, assuming that you are setting up in a form of a branch, so group policies are not preferred to extend to your branches. Entities should constitute the separate in case of the branches. So, for an example, you can say that tomorrow you extend the policies which are already adapted at the group level, which is not preferable given of the fact this is a complete separate jurisdiction from the IFSC point of view, as well as from the ring fencing perspective. It is preferable to adapt or to formulate the separate policies from the branch perspective. I will touch upon the reporting criteria now. So as far as the reporting is concerned, the entities are required to prepare and submit the annual report, right, for the FMEs and the schemes along with the average summary. Now this average summary is nothing but the fact sheet typically, and to submit to the authority within 4 months from the end of the financial year. This average summary is required to share with the investor within the 4 months from the end of the financial year. And entities are also required to submit the compliance report along with the detailed information pertaining to your fund or a scheme. And the same is required to be submitted to IFSC authority within 21 days, within 21 working days from the end of the each quarter. Now, this reporting format is available on the IFSC's website in case one may wish to refer. I would like to quickly touch upon the penalty provisions as deliberated by the authority. Authority has also stated the penalty against the failure to submit the periodic returns within the prescribed time frame, which is $100 for every month for each default beyond the prescribed time or the deadline, subject to maximum fee capped at $1,000 per financial year. This is also, I mean, there is also circular, one may wish to refer, there is a circular of activity fee based circular issued by IFSC authority. I have also mentioned the reference underneath, one may wish to just take a note of it. So this regulation, the provisions are well articulated under this circular. Now, given of the fact that IFSC entities set up under the ambit of SEC laws, compliance pertaining to SEC laws are also applicable. A few of them are filing of the commencement of the business with the Office of Development Commissioner within a year from the date of issuing of the letter of approval. Apart from this, the monthly performance report, annual performance report, reporting of the export through service export reporting form, reporting of goods and services availed for authorized operations, which is required to claim the benefits under the GST rules. Now, this monthly performance report is required to submit with the SEZ customs by 5th of every subsequent month. Annual performance report is required to submit with the Office of Development Commissioner within 180 days from the end of the financial year. Entities are also required to report the export of services wide service export reporting form by every 10th of the subsequent month. And entities are also required to adhere to the terms and conditions as mentioned in the letter of approval. Now, apart from this, there is also a FATCA and CRS registrations. There are also other registration apart from the FIU are required, like a fund management entity is required to register with FATCA and CRS. So in case of a branch structure, if your parent entity is taking care of filings, then accordingly you can make a compliance. You can ensure the compliance. There are certain ambiguities with regard to CKYCR, since there is no caption pertaining to registration of the IFSC units under the CKYC portal. So the regulators and particularly I would say the I mean, they are envisaging to open such registration in soon. I don't. They may soon out come out with some clarity with regard to that. Also, one thing to note that the regulator is also considering the guidelines pertaining to accredited investors. So, across the slide, you would have heard about the accredited investor, the benefits to accredited investor. However, the regulator has not come up with any specific guidelines pertaining to accredited investors. The same is under consideration, and we expect the same should be come out in coming weeks. Now, with due respect of time, I attempted to summarize most of the aspects from the compliance standpoint. Happy to take up the question if one may have. Thank you very much.
Thank you, Parth. Thank you, Parth. It's really, there are few things which really are new, and you have just updated what is recently being, as we talk, as we are doing this webinar. I think IFSCA is holding one webinar on FIU registration for the entities of who are the entities registered in Gift City. So that is also going on now. So thank you, Par. So we will take up the questions. I think we have a lot of questions which have come up. We are already running short of our time, but Vaibhav, I think you will spare 10 minutes to just we'll catch up all the questions. I know you are busy, but let's take on the questions and respond to the queries. So I'll just read out the questions. And so what are the scope of mutual fund distributors in Gift City to register themselves in Gift City? So what do you have to say, Vaibhav, or either of you? So they are asking what is the scope for the mutual fund distributors in Gift City?
So I think mutual funds will get covered in the retail category, Samir.
Yeah.
They will not get covered in the non-retail category.
Yeah.
And that's what I
So
would
we are talking about scope of mutual fund distributors, probably the guys who are selling mutual funds and all those things.
Sure, sure. Sure. No,
So
so I think, see, there is a separate, separate regulation also which covers, which is more on the financial services side, which is the finance company regulation. That should cover a lot of aspects around these things. But the only aspect really that I would say is that by definition and by intent, the entire Gift City and IFSC is for doing financial services activities, using the Gift City, either sourcing overseas money and investing them in the domestic markets, right? So that is the broad intent. With that intent, if one wants to set up anything in the Gift City, I think that should be possible. Mutual fund distributors per se, I would believe that they should get covered somewhere in the finance company regulation, where if you are setting up and wanting to have overseas money come in, then I think that should be doable.
So the
Samir, I
second
would like
question
to.
is the net worth required of the FME required at the time of application? So Parth, you can take this. Is the net worth maintained at the time of application?
Okay, before answering to this question, Samir, actually, I would like to touch upon the mutual fund related question, right? So the question is more from the perspective of what is the procedure to register a distributor who is already registered in India under the MFI. No, so it's
Yeah.
an MFI member, and they wish to
Yeah.
register as a distributor, or they want to sell or market the fund which is based out of Gift IFSC. Now, what are the provisions? One can do as long as that particular distributor signs the code of conduct as mentioned under the distribution guideline issued by IFSC authority. So I tell you, as an FME, I have to ensure that the distributor will sign the code of conduct. That code of conduct can be a forming part of the distribution agreement, and subject to signing that code of conduct, the distribution can start selling all the funds. There are two ways. This is the first way. Another way is to get themselves registered in the IFSC regime. And for that, there is a separate registration guideline has been articulated by the IFSC authority. One may wish to refer. And then after subject to making an application to the IFSC authority, obviously the substance requirement is there, right? So there will be a one principal officer and all. Apart from the principal officer, there will be a support staff who will be specifically targeting to cater the investors. those will be there, and subject to meeting these criteria, and there are, yeah, definitely application fees and registration fees are also there. Subject to meeting these all criteria, the mutual fund distributor can also open their shop in IFSC. Now moving to the next question, which is with regard to the net worth requirement. Now this net worth requirement, I would like to touch upon that. According to Regulation 119 of Fund Management Regulation 2022, that is a general obligation, and the fund management entity are also adhered to follow the code of conduct as articulated under the same regulations. Now, the net worth requirement is something like that entities have to ensure that a network, they take a record of such network, they maintain the network on a quarterly basis. And if you also look at the reporting requirement and the compliance report, which has issued by the FSC authority, the entities will need to, or the compliance officer on behalf of the entity will need to confirm that the FME is meeting with the net worth criteria at all times. Yeah.
Okay. So but I think at the time of application, the regulator would see the network. They would always ask for it.
Yes, so there are two elements. The one element in case of a branch. So in case of branch, you will need to ensure that the parent entity is meeting with the network, and such network, according to your branch structure, has to be earmarked. So the parent entity has to earmark network pertaining to your branch. Earmark is nothing but a separately. You have to, bifurcate that particular network or the portion of the network aside for the branch structure. And for the fresh incorporation, definitely there is a network requirement. So if I'm not mistaken, that if a fresh incorporation is not having any other entity in the India, then the net worth of the promoter will require to be submitted.
Yeah. So there is a question which is mandatory to open bank account in IFSC. So I think it is already mentioned that yes, when you are operating in IFSC, you need an account in IFSC, and that is mandatory.
Yeah, that is mandatory.
So somebody has asked who will be then associate under FME. So associate is, if you see the regulation 2E, so wherever 20% or more is controlled by a partner of an FME, and the definition is provided there. So you can see that that is the definition of the associate from the FME perspective. So what are the other business activities FME entity can undertake within Gift City? So Parth, if you can take that. So I think Vaibhav has to leave. He had a client call. I think we are already running out of the time. So Vaibhav had a call, so he had to leave. But we'll take few questions, and rest what we'll do, we'll compile the answer of those questions and email to all the participants so that they have the information on that. So, but we'll try to catch up, Parth. So what other activities FME can undertake in Gift City?
As far as the activities are concerned, I guess the regime is much robust and is much ready to cater all the activities, I would say rather. So apart from the fund management activities, I would say that the banks, Indian banks and the foreign banks can open the shop. With regard to the insurance, I guess Indian and foreign insurance or the Indian foreign reinsurer or the intermediaries can open their shop. With regard to the capital market, I think the stock, commodity exchanges, ancillary services, clearing corporations, distributions. So distributors, depository, broker, registrar, which are the RTA agents, these are covered up. From the AMC point of view, as rightly mentioned throughout the session, that the AIF or investment advisory, portfolio management services, wealth management, pension fund services, custody and trusteeship services, REITs, InvITs, family investment funds, these have been covered up. And from ancillary services point of view, I guess aircraft and ship leasing, fintech, accounting, auditing services, legal and consultancy services, fund administration services, these have been covered up. Yeah.
So one is if the can the fund manager and FME in Gift City can have a domestic investment manager, or they have to be from Gift City only. I think the investment manager itself is an FME, and it has to be in Gift City only. So we are talking about fund FME is has to be in Gift City. Then only you can. It cannot be outside the Gift City. So I think there are questions are huge. I think, but we'll take few. But rest we will cover through prepare. So I understand the difference of regulatory requirement between the retail and non-retail scheme. However, can you please explain what fund managers generally prefer practically and on a what basis. So this was what I was referring to earlier. When you are strategizing your fund setup, whether it is retail or non-retail, that would totally depend upon what kind of investors you have, what is the investor base, what kind of corpus you are targeting, and where you are targeting to invest, and where are your the target companies, where whether you want to do on a listed, do you want to trade on listed one, or you want to unlisted. So all these things would make your decision on what kind of FME you need to put out.
And one thing you
So
will
I
need to
think,
ensure that the investment. So I would like to touch upon here the LRS thing. So here the IFSC is permitting the structure to set up with the inbound as well as outbound strategies. So taking an example of an FPI, which is an inbound FPI investing into Indian listed space. So if you are targeting the Indian residents and you are bringing the Indian residents through LRS route to invest in your FPI, and that FPI is again investing into Indian listed equities, from OI regulations by RBI, it is not allowed. So one may need to make sure that which kind of investment strategy they have to come up with. Obviously, regulator is there. So once you file the scheme documents, the regulator will also definitely help you out in terms of refining it wherever it requires.
so I think somebody, the question popped out, can you tell us what are the angel fund active in Gift City? So I mentioned in my deliberation also that V Founder Circle, one angel fund is of V Founder Circle, which is active, who are doing investment, and one is of Venture Catalyst. They are also doing investment. So these two angel funds are very active, and both are serviced by us. And if you need more information on working on operations of angel fund, you can just connect to our team. And I think there are questions more, but I will, instead of holding on so many people, for we have already exceeded our time. So thank you participants for all, and Parth, thank you for being here, and really you have given a lot of insight. I think some of things I was also unaware of that. Thank you for updating me, and it's pleasure to be, and we will collaborate all these questions, prepare answers to these. To we are unable to attend, it will be mailed to all the participants. So thank you. So Ananya, you can just thank of the participants and Parth, and then I think we can move on.
Definitely. Thank you, Samir sir. I would like to extend my thanks on behalf of India Juris to Mr. Vaibhav Gupta and Mr. Parth Shah. It was indeed an enlightening presentation by all our participants. And I am sure that all of us have resolved our queries and have learned a lot from this presentation. I would like to thank the participants for their valuable time and also the speakers for their presence. Thank you so much.
India Juris is having innovative strategies.
As India Juris, we aim to be the best place for the lawyers to work in and set up standards for the lawyers to develop their skills being in this law firm. We aim to provide high standard of international legal services to our international, global and domestic clients.
India Juris is having innovative strategies with regard to intellectual property rights disputes as well as international dispute resolution. And we are having a lot of milestones which we have achieved and about to achieve.
At India Juris, as a full-fledged law firm, we are advising corporates, startups for their advice on IPOs and further transaction matters.
As India Juris, we aim to be the best place for the lawyers to work in and set up